Hello and welcome everyone to the Wall Street Blockchain Alliance's Crypto Roundup for Friday, June 6th, 2025. Ron Quaranta here with my amazing co-host, David Brill. The globetrotting Joshua Ashley Clayman may be joining us. David, we're not quite sure yet. Thank you everyone for joining us. Lots to cover today. Before we begin, our usual disclaimers. Obviously, please keep in mind that everything we're discussing is our own personal opinion. It doesn't necessarily represent the opinion. I think Mr. Miller's on the wrong link. Doesn't necessarily represent the opinion of our firms, and everything David and I are discussing really are our own personal opinions, not necessarily the opinions of our firms. David, with that, let's kick it off. There's a lot of stuff to cover. Let's start with the economic data as well, and some of the big news. We had an IPO that happened recently, and I think a whole bunch of people have the wrong link, and I am sorry about that to everyone. But David, let's kick it off. Let's talk about some of the economic data. Let's talk about some of the market moves. BTC maintains 100K. Tell me about what your thoughts are on the marketplace.
Sure. First of all, I just want to take a moment to recognize this is the 81st anniversary of D-Day and just continue to express gratitude for all those who have served for our country and supported us to where we are today. So I just wanted to take a minute and say that. Pivoting to the market, what a fascinating week in this market. I mean, I think you've had some things you wouldn't normally expect happen, but I'm going to focus on the positives here. And kudos to the folks at Circle for having a very successful IPO. Maybe should have been priced a little higher, but nevertheless, I think that it's really a good sign that there is interest in infrastructure in crypto and stable coins in crypto. And I think there's a lot of demand for people to have access to these products. And Circle, unlike the Bitcoin ETF, where some of the wirehouses still haven't approved it, Circle was accessible to everybody once it started trading. And I think we've seen a lot of people buy those shares. So what do you think about what's happened with Circle? Are you surprised by the uptake?
David, I'm going to ask you to hang on because I got a bunch of people who have the wrong link, and I have to apologize to everyone. I'm going to try to fix that live stream if I could. I'm going to leave it for you if you can keep going for a minute.
Yeah, sure. So look, why does Circle matter? I think it matters because, if you have one-off, like eToro had a very good IPO. So you could say, well, okay, that was one. But now Circle's had a second one. And I think there's a couple of others in the pipeline. Like I would expect Kraken to be a very successful IPO when it goes to market. So I think what you're really seeing is a demand for companies in crypto that when they come to the capital market. So I think that is very positive. What I also think is positive is that we are at the same time seeing, a nice bounce with the Russell and with the NASDAQ. And I think that confluence of small caps doing well, tech stocks doing well, and crypto doing well kind of bodes well for us to guard this 100K level and hopefully see a move up to maybe the 120, 130 level.
David, I'm back, and I'm sorry to everyone for the wrong link that we published. I will talk to the team, and we will fix that going forward. David, I'm with you, although I have to say a couple of things, not to be contrary about it particularly, but the Circle IPO's opening day rise was over 150%. I was a little shocked at that, the rapidity of that rise. And I'm going to bring up something that we talked about in the green room, which was some folks on Twitter had pointed out that when Coinbase went IPO, for many it marked a market top. And I'm just a little concerned about some of that euphoria. But I think some of the underlying use case for what they're doing, let me rephrase that. Stable coins make sense. There's clear market demand, and we've seen that. And they were over allocated. What was it, 25 times, David? If you read some of the reports, I'm probably screwing that up. But how much further can we go without stablecoins being used in day-to-day commerce is the question I have.
Well, look, I mean, I think, we have the Genius bill. It needs to get approved. It needs to be voted into law so that regulated entities can use stablecoins in commerce and others. I mean, some companies are starting to use them, and I think we're going to see more and more of that. I would say this is different than the Coinbase moment because also these companies are more mature. You have companies now 2 more years mature, and I think the exchanges, Circle, we'll see who else comes to market. there's a desire to have exposure in the space that may be different than that same desire was a few years ago.
Yeah. And David, the interesting thing about all of this really is, how is this impacted by some of the macro conversation? We constantly have the kind of macro conversation. We're clearly risk on today in the market, and we'll bring up some of the economic data. But one of the challenges you and I often text about, and for the record, everyone in the audience, David and Josh and I text on a regular basis, and I'm usually driving them crazy with comments about tokens. But David, when we look at crypto writ large in the macro picture, I'm going to raise a thesis I brought up earlier. Is crypto more reactive to risk on or risk off than what I'll call TradFi assets?
It's really hard to say. Like, my initial view is that it's sort of, when risk on, that's where I would lean to, and I still lean that way. But I do think that we see dollar weakness, and I do think that people look at Bitcoin and crypto as something that is a hedge against dollar weakness. And look, I do think that if we do get a Bitcoin strategic reserve, some kind of holdings by our country, a lot of other countries are going to move in and do that. And I've actually been hearing anecdotally that a couple of Middle East countries have been buying, Bitcoin for their balance sheet. So, my first instinct is risk on, but also there's a risk off. There's a risk off narrative that's also meaningful too.
Yeah. It's interesting as we look at some of this. You mentioned balance sheets, and I was reading the other day, I have to double check the data, but well over 220 companies, either publicly or privately, hold Bitcoin on their balance sheet. So let's dive into that a little bit, David, because it's a fascinating business model to me. Stepping away from stablecoins for a moment, companies that exist solely to buy Bitcoin. And then you and I, from a macro perspective, and certainly, you know the equity markets well, going back a couple of lifetimes ago, you start looking at what's the premium that some of these companies, the PE arguably, can charge, and what's the price of their stock relative to their Bitcoin holdings. Are you worried about some of the numbers we're seeing? We're seeing multiple premiums for some of these stocks that are trading relative to the underlying Bitcoin that they hold. Is that market enthusiasm or is that market hype?
Well, I think it's also market accessibility. Again, when you have companies and individuals who can't buy the Bitcoin ETFs through their wirehouses, of course they can go to online brokers and buy it. But I think some of those are those kind of plays. I think I get worried when there's too much financial engineering to create the capital to buy the Bitcoin. That's where I get concerned.
Yeah.
But look, I think those multiples over time will decrease as there's more access to buying either the Bitcoin ETF or other products. So I think those margins will decrease, like GBTC's premium decreased.
Yeah.
So I think I'm more worried that everybody trying to outdo themselves, and then if you bought too high and you don't have enough cushion, if there is a sell-off, our company's forced to liquidate some of their holdings.
Yep, David, thanks so much. And for everyone watching, thank you so much. If you've got questions for David or I, please put them in the chat. And again, apologies to everyone out there for the wrong link. We'll make sure that doesn't happen again. David, as you talk about financial engineering, it makes me think of the biggest holder in the public markets of Bitcoin, which is MicroStrategy now. They do some pretty sophisticated, what I'll broadly call engineering. It might not be the most complex, but it's not simply issuing equity. It's issuing preferred, it's issuing debt, it's issuing different tranches of debt. Is that what you're talking about when you're concerned about some of that financial engineering to get access to hold Bitcoin as an asset?
I'm not so concerned with strategies because they've been really clever about it, and they're getting, such low rates of financing to hold the Bitcoin. So I think they really mastered it. And so, they found a glitch in the matrix here, and, and they've mastered it. So not really concerned about strategy. I'm just concerned with, the fourth generation company trying to compete and outdo some of the other ones, and can they, and how do they do it? And do they have enough cushion? Because we know crypto and Bitcoin is still, although volatility's gone down a ton, it still can be volatile. You still can have big moves, and you need to have cushion for those moves.
Yeah. So on that point, David, I'm just going to push that a little bit more. And I'm with you. I agree on strategy. It's a solid team, a well-known public company for at least a couple of decades. But when you look at some of the newer entrants to the space of being acquisition companies that solely to hold Bitcoin, it's starting to feel like Long Island iced tea back in the day. And to be fair, like there were some of these companies that are essentially publicly traded companies on life support. We used to call them pink sheet type of companies, or companies that are SPAC companies that are rolled into now pivot solely to own Bitcoin. One was I'm probably messing this up, might have been a cannabis company or some kind of company that now its mission is to hold Bitcoin. To me, that's always a little bit of a warning sign. Tell me I'm wrong.
No, I don't think you're wrong. I think it all comes down to the strategy you have for holding it and how you're raising funds to hold it. Look, I don't have an issue with a company, even in a shell, pivoting to another uh, business plan. Here she is. Uh, Great time, Josh. We were just talking about cannabis, so good time to have you.
And
Uh,
I
just
use the phrase
kidding.
risk on, Josh. I'm sorry.
Yeah, and everybody's risk on. Just kidding about the cannabis point. But just to finish your question, Ron, I think, look, I don't have a problem with businesses pivoting, but you just want to make sure that the people who are running these strategies to acquire Bitcoin for their balance sheets really know what they're doing and have a real plan, and not just sort of buying it ad hoc and trying to resuscitate a symbol that hasn't gone anywhere.
I know David a long time, folks, and I'm sure the words caveat emptor are floating around in his head as they wisely would, and we put that out there for everyone. Josh, I'm assuming the Gulfstream was late landing at the private airstrip, but wanted to pull you into the conversation. It's been a crazy market week, but would love to hear what you've been up to.
So, I mean, I've been up to work, uh, like I'm sure you guys have as well. But yeah, I mean, last week, as I think you guys know, I was in Las Vegas, and I also went to Wyoming, and that was really fascinating. So it with the backdrop of everything that's been happening with the various bills and
Yep.
movements in lots of different directions. I think it's an exciting time to be meeting face to face with people. But yeah, I didn't hear your question as you were leading in to bring me in. But yeah, with what I've been doing, it's just mostly work.
Shout out to David Pope in Wyoming and Caitlin Long, who we haven't spoken to in a while, a friend of the WSBA. Josh, we were talking about public companies owning Bitcoin and some of the crazy market action, including the Circle IPO. Did Clayman Family Office, you may or may not be able to talk about this, get access to the Circle IPO? And
So
what did you think about it?
Clayman Family Office did not. Nevertheless, I'm very happy for them. And yeah, I mean, I think what's also exciting about that, number one, is there was so much talk about whether the IPO market was coming back, whether these IPOs that had been announced were going to be paused indefinitely. So I think it's a great sign. I think also it's super interesting that just in the past few weeks we've seen bids, right, by major players for multiple billions of dollars for potential acquisition involving circles. So yeah, I mean, I think broadly speaking for the market, it's a good sign. What do you guys think? I guess you already said what you thought.
I mean, off the top, we overall, it's a positive sign in my mind. Josh, I mentioned to David, and I don't mean to be harping on this point, but some folks in industry have pointed out, well, when Coinbase went IPO, that marked a market top. I tend to agree, David. It's a different set of circumstances, but I think we're broadly supportive of the idea that this is a good time to be IPOing in this space.
Yeah, look, and also look, let's celebrate their perseverance. I'm sure they wanted to go public years ago.
No joke.
And a lot of companies did, and our whole ecosystem could be very different right now if we had a number of mature public companies that had, were able to be, 2 or 3 years out already. But listen, credit their perseverance, and I do think this is a bullish sign for our industry and the public markets, and I do expect, more IPOs to come of crypto companies, and I suspect that there'll be healthy demand for those companies when they do go to market.
David, Josh, we'll ask you to go into the macro stuff. Josh, go ahead. I'm sorry, I cut you off.
Well, I was just going to say, just the fact, holding aside like market demand or price or things like that, I mean, I think it shows such a shift that now, large entities in our midst, right?
Yep.
They're willing, not just that they're able to go public, but that they're willing to go public, right? Because that is an enhanced level of scrutiny, of
Yep.
disclosure, of everything else. And I think, the fact that it's happening at a time when, the SEC and other regulators have become much more crypto friendly, there's no mistake there, holding aside like the broader market view and share price.
Yeah. And Josh, the interesting thing about this, and David, it kind of circles around when we originally started the conversation on these stable coin issuers, and arguably it's a very profitable business. And we can have the use case conversation about the stable tokens, David, as well. But, some of the news last week was that some of the largest banks, including banks that previously were very, very critical of crypto, are now looking to work together to issue their own stablecoins. David, is this protecting legacy franchises, or is this trying to participate in the innovation that stablecoin should be for the global markets, or is it both?
Well, look, I think it's both. But look, I don't think a closed loop system like a Zelle for stable coins is necessarily the answer. I think if it was an open loop system and you could buy them on an exchange and then use them in that consortium, that could be interesting. Look, there's a very profitable market here, and I don't think the banks are going to give that away, nor should they.
Yeah.
And I think the technology is moving in such a way that this will benefit all parties. So I don't think it could be a surprise. I just think that, as you'll see in different use cases, as we go on, the ability to wring out costs and to bring in efficiency is just going to continue to improve. I think the one downside, Ron, I was just going to say, obviously, with stable coins and payments using stable coins, you lose a lot of that float, depending on who's holding it and where they're holding it. And so that's an issue that institutions will have to deal with.
Go ahead, Josh.
I mean, from my perspective, I represent certain financial institutions, and including banks, that have been exploring stablecoins, right? For some time, and may or may not have developed some, right? So I think for them, I think broadly speaking, I do think there is an element of, okay, well, we want to stay relevant, right? For banks in general.
Yep.
But I also think, strategically, aside from personal relevance and kind of whatever the description was that you used, that was very helpful, actually, Ron. I thought it was a good descriptor. But just more of looking at opportunity. I think the banks that I've talked to have really been very strategic in terms of saying, okay, looking at regulations around the world, we think that there's an opportunity here. We think that this is a good entry point. This is why this would be helpful here. But yeah, there is an aspect of staying relevant, but I think it's more than just trying to hang on to some kind of central role, right? I really do think that it's people, banks often may move more slowly than other entities. Nevertheless, having the strategy and saying, this is where we think things are going, and we're going to try and meet it there, I think I applaud.
Josh, it's a good point. David, I want to wrap up the stablecoin conversation with your collective permission. I want to talk about business models again. And the reason I'm bringing this up, David, you and I chat frequently about the macro picture. We look at data, non-farm payrolls came out above the estimate. I think it was estimated 125,000 is 139 or something like that. And of course, the last month or two were revised almost across the board. Unemployment, David, hasn't changed, 4.2%. And there's this building call, particularly from the president, whether or not I do agree with him, that interest rates should be cut. David, if interest rates get cut, the treasuries being held by some of these stablecoin issuers return less on a month-over-month, year-over-year basis, cutting into their margin. Will valuations and will that business model be impacted in a lower rate environment?
I mean, look, the revenue coming in will be impacted for sure. Valuations will depend on, how profitable they can be in a lower interest rate environment. But I think there's probably a range of interest rates that are, projected for these companies, and then the revenues are based off the back of that. But look, we're in a very interesting place. It's in our country's interest to have lower interest rates, but the way the market is right now, I don't know that the market should be getting. I don't know that we should be getting interest rate cuts. So it's this very like weird dynamic of like what's best for the country,
Yeah.
and then sort of what's best for the data dependent Fed. So it's a very interesting dynamic that we have.
Why though, David? And again, I don't want this to be a political conversation. You and I and Josh have that offline. But we've got a president saying cut the interest rates, whether or not we agree. We've got a Fed that is data dependent. Why? And to be clear, ECB has cut interest rates. Other nations overseas have cut interest rates. Why not us? I guess is the question.
Well, I guess the question is, with all the tariff matters going back and forth, are we going to see some inflation from the tariffs?
Yeah.
And so I suspect we'll see some. I think a lot of this has been overblown in the media, but I suspect we'll see some. Some costs are going to get passed along, where there's going to be a lot less buying of certain things until these tariffs get resolved. So I do think some inflation will show up. It may be counterbalanced by, lower oil prices. Maybe, rental and housing prices go down a little bit because they've just been unsustainably high. There could be some counterbalance, but I do think that there is a little bit of inflation out there that we will see. Maybe not in food, but just maybe in sort of consumer goods and other things that people consume.
So to be clear, David, your premium whiskey collection at the Miami compound has not been impacted by tariffs. I want to be clear when we talk about some of this stuff.
Well, I always think of myself as a futurist, Ron, so I try and be ahead of the curve on these things. So
you stockpile, Josh.
Yeah, I certainly don't want to be, 13th man on the bottle kind of thing. But no, all joking aside, though, I do think, that the important inflation numbers have gone down. Food, gas, and it just can we keep it down if we do see some impact from higher prices from tariffs? Are they going to be passed to the consumer? I think that is like the big question. And I think that is one of the things that will prevent the Fed from, lowering rates in 2 weeks.
Josh, I'm suspecting you're a fine wine collector. Has it impacted your?
Your wine I've had for so long, for so many centuries. The tariffs couldn't have an impact. No.
Josh, David,
rosé all day.
Oh, Madeira! Isn't there like some kind of really good wine called Madeira, like really old?
Yes.
Am I making this up?
There are several Madeiras that are a couple of 100 years old and take. Let's put it this way: Sotheby's sells them, not Trader Joe's. So it is an interesting dynamic. Josh, I wanted to ask you because we're talking about market stuff, and we'll come back to that. There's other things to cover there. There's been a lot of regulatory and legislative stuff as well. The legislative stuff certainly giving me headaches as I look at the pile of papers on my desk. Josh, the two things that caught my eye, and both of you having keen legal eyes on some of this. I know there's a deadline coming up for the proposed Ripple settlement, and forgive me if I don't remember the date, but I wanted to know if you could tell the audience, Ripple SEC proposed a settlement in the SEC v. Ripple case. Where does that stand?
That's a great question. And it's not something that I have an instant answer to right now.
Fair enough.
But what I would say is, if we remember back, if I'm remembering back correctly, that the initial proposal had been rejected by Judge Torres, right? And the idea being that no parties, you need to explain, and SEC, you need to explain why this is extraordinary, right? So basically they tried to go the easy path. Now they have to go the tough path. I haven't been following closely enough to know exactly where that is or what filings may have been made. But I think my sense, although I don't have the crystal ball David does, and I'm certainly not a litigator, my sense is that they'll get there. Like somehow there will be this settlement, right? But just that it won't be the easy path that they had hoped. And I can see lots of perspectives, right? But what I imagine would be a potential motivation of a judge who spent a lot of time coming up with this kind of split the baby, thoughtful judgment is like, okay, well, you brought this case, SEC. Now you're saying like, oh, my bad. Like, so I think that's where we are. But David and Ron, you may have a better view of the particulars.
I don't have a better view of the particulars. As a non-attorney, and I might have mentioned this on the broadcast last week, when I see the news that a regulator is saying, you know what, let's put this case to bed. Here's a settlement. Here's the proposed settlement. And of course, the company on the other side of that case says, great, let's settle this. And a judge saying no almost surprised me. But it's David, it's not that uncommon, is it? Or could it be? Is it more uncommon than I thought?
I think the scenario is more uncommon. I don't think the response. I think some people expected this response, and I think both the parties are going to have to do, full pleadings on why, or motions, or briefs for that matter, on why, the judge should overturn, the previous ruling.
Yeah.
So I think though this underscores the need for legislation, because if you have changing administrations and then different regulatory agencies taking dramatically different views on certain topics, it really, really can make it difficult for judges and for businesses to conduct business when things can change dramatically. And I think what we could all say collectively is we think that, the cases that were being brought, especially the non-fraud cases, just weren't consistent with the law as we saw it being applied.
Yeah.
If we don't get legislation, you do run a little bit of risk that, if we do get a different administration in 4 years, and maybe a Democratic one and not a Republican one, they could skew to another view in the SEC that's not really consistent with the way we view and our industry views the laws applying to crypto.
Josh, David opened the Pandora's box of legislation, so here we go. So we've seen a couple of stablecoin acts that are moving through both houses of Congress. We've got the Genius Act, we've got Stable Act, which WSBA, full disclosure, had submitted commentary to. The market structure bill that was a draft, then had another draft, and then became the proposed Clarity Act, which is yet a third draft. David, Josh, you and I were all meeting at 2 o'clock. I think, Josh, you're joining us. I'm not sure. 2 o'clock today to review our commentary and feedback on the Clarity Act. David, I'm going to inject politics into it. I keep saying I'm not going to, but there really seems to be a political perspective for certain folks on Capitol Hill not to engage in what arguably should be bipartisan legislation. Arguably, it has been bipartisan in its genesis. And there's hearing after hearing now about let's not answer the call for the industry. Let's almost feels like put roadblocks up to do this. David, am I over politicizing the commentary there?
Let's take it back a step. This industry, the work that we do on a regular basis, this should be a bipartisan issue. This is technology. This is helping our country move forward, be more competitive, be more efficient. This should be a bipartisan issue. Unfortunately, it's become a partisan issue, although I think our hopes is that it's becoming more bipartisan. I think, frankly, if there was a different political environment, this bill would have already been passed. Yeah. I think that, unfortunately, the politics it can't be an easy process for this to get passed. And I think some of the roadblocks that are being brought now are really not as substantive as you would expect to see and are sort of done in a very politically calculated way.
Yeah. Go ahead, Josh. I agree. I also just want to apologize for 1 second for any weird facial expressions I had before. As Ron and David know, I was having a lot of pop-ups on my computer and trying to disable them.
Josh, one of those days. I've got things ringing all over the house that have never rung before. So let's just keep plowing through.
So but on this point of the legislation, I think aside from the question of whether something should be bipartisan, I would say that even within parties, I'm seeing a lot of differences of opinion that fall down around, or that linger, maybe not fall down, that linger around the question that I think is so important about having both a state and federal path. Mm-hmm. And whether this is in the stablecoin bill or whether this is in the market structure bill, right? This is something where I think behind the scenes there are some tensions, right? Like there are some people, many people who believe, look, you should be able to have state paths for this and have same kind of recognition, right? The same kind of opportunities, whether with different types of accounts at the Fed or whether with access into various states. And then there are others who say, no, actually, you know what? We've got federal, we've got state, and there shouldn't be something that says that you have that kind of recognition. I think that battle is being valiantly fought behind the scenes. And I think that is something that I would keep your eye on.
Josh, David, to that point real quickly, and I'm with you, Josh. As you know, I have to give a full reading of the latest draft of the Clarity Act. But the other thing that I believe on a bipartisan basis that they're working on is something the three of us have spoken about for many years and many in the industry have put forward, which is what is the delineation between a security and a commodity? And I think they're working very hard to at least provide clearer guardrails. We've been Josh, you're going to kill me for saying this, but sufficiently or decentralized keeps coming up in the conversation. And in the first initial drafts, it was very nebulous. I think the Clarity Act draft as it stands really is trying to create bright lines of when is it a commodity, when is it a security, and who regulates it. And, you know, again, Josh, to that point, really making it a federal perspective versus all of the individual state perspectives, which would arguably make the U.S. a bit more competitive than overseas nations having to figure out what's happening in New York and Illinois and Texas and all of these other states. David, did you see it in the original conversations that you and I had about the act?
Well, look, we've all talked about how we think, you know, a federal position would streamline things. You know, I think I want to go back to the Genius Act for a minute, because I think, you know, you do have this thread here between the federal and the states. And I think the problem is that if the states were more uniform, then it might be more palatable. But like the states are still in a place where you have to do something for state X, you have to do something for state Y. And I just don't think it's streamlined in a way that makes it easy for people to be compliant and not throw a lot of resources at it. And I think it really does make us, you know, not as competitive. So I think, like Josh said, and the other thing I want to talk about Genius is that the fact that, you know, people can't get interest or yield passed along is not a partisan issue. I think that's like an intra crypto issue, and I think people have different views about that. So I just wanted to, you know, agree with Josh on that. But I do think we need to get this bill passed, and I really hope that all the lobbying firms on behalf of crypto really continue their efforts, especially on the Democratic side, to keep, you know, the Democratic folks who were supporting that bill originally keep their support online, and hopefully build bridges to others who, you know, haven't been involved in the ecosystem.
Josh, I feel you wanting to answer.
Yeah. So I think David said it very well. I would also add that, for example, in the market structure bill, you know, there are some who say, oh, wait, you shouldn't be able to be a qualified custodian unless you meet certain criteria, right?
Yeah.
And that, as David noted, like the states have different types of criteria. At the same time, I personally think that having both a state and federal options are important, so long as we're meeting a certain standard, right? Yep. To your point. I think, and this is something that I heard, I can't say from whom or what, and it's just, or any specifics really, so how much value is it going to be? But just remember back in the day when Sam Bankman-Fried was very active in legislation.
How can we forget?
Legislation, right. Now, holding aside the fraud associated with that and the bad acts and all the Sam Bankman-Fried stuff, or like holding aside that, I do think that it's been communicated to me that within some of our market right now, our crypto space, there are beginning to be certain factions, right? Where there may be attempted moat building, right? Okay. If you think about how some people said that, oh, well, SBF was proposing certain legislation or working on certain legislation, like I guess the DCCPA and others that he was heavily involved in, with a goal to not allowing DeFi, for example, back in the day. I've just heard of similar types of moves nowadays, and I just hope that for the benefit of the industry, we can all get the legislation passed and then, work it out on the back end.
Yeah, and that's the challenge with some of this legislation, Josh, which you're wisely alluding to, which is the innovation that is underpinning digital assets is continuing to evolve. How do you craft federal legislation that can accommodate that? Yeah, and I'm just going to say it, David. We don't want to have to revisit this after legislation's passed in 10 years and do a new round of a digital asset version of Dodd-Frank, for example, because we didn't do it right to begin with. So complicated topics, Josh, David, I appreciate it. Again, for everyone in the audience, thank you so much for joining us. If you've got questions for David or Josh or I, please put them in the chat, and we're happy to try to address them. Josh, I'd love to stick with you for a second if we could. The regulatory side of all of this, and I'm probably misstating this because I haven't read it in full, and several of the commissioners have commented, but the Division of Corporation Finance issued commentary on whether or not staking involves a security, and the answer seemed to be that it does not, and certain commissioners were really not happy with that. You probably have forgotten more about it than I'll ever know, Josh. Can you speak to that a little bit for the audience?
Absolutely. So I think it's important, as we've talked about in prior sessions, a lot of what the SEC and the Crypto Task Force and here at Corp Fin are doing, the staff rather of the division are doing is trying to draw bright lines in what we previously always used to say, or they used to say, was it's facts and circumstances.
Yep.
So trying to clear away the brush, right? And here, this is really talking about a few different things: native staking that you do for yourself.
Mm-hmm.
Staking done by a third party for you, right? And also custodians having, facilitating staking for those who are custodying their assets there. It specifically carves out liquid staking, restaking, and liquid restaking.
Yep.
So that's outside of this. I don't want to call it a safe harbor, but outside of this guidance. There's also limits on or clarifications on, for example, when a custodian is doing this on behalf of people. So to the extent that the custodian is exercising great discretion in how much, whether, how, when to stake, that could push it outside of this clear lane, right? But there is an acknowledgement that, just because you are aggregating crypto assets, aka pooling, right? But using a different word, aggregating them to meet staking minimums, that doesn't necessarily create a security. And I think I liked a phrase that they used. I'm going to say it from memory, but I'm pretty sure it was something like this, maybe not exactly. And it said something like, it referred to economic rewards, right, on one hand, but it was also saying from something like the efforts of securing the network, and basically with a goal to ensure the continued success or the continuance of the network itself. So I think that sort of thing, not that we're going off and saying hey, you're going to make,
right,
et cetera, but rather just an acknowledgement that yes, there can be economic rewards, there can be a yield, but the yield is for a different purpose. The yield is because this is built in as a way to secure the network. I think that's what many of us have generally advised, but it's I think a good message to have out to the market. But what do you guys think?
I mean, I haven't read the entirety of all of the statements, and I know, respectfully, I think it was Commissioner Crenshaw was pretty not pleased with the commentary from the Division of Corp Fin. But Josh, David, it makes me ask the question: if we're looking at staking that's designed in the aggregate to secure the network, it makes me ask something else, which is, in the marketplace, that staking that is not designed to secure the network per se, or at least results in yield, how much does that implicate banking law then at some point? I mean, David, you and I've had this conversation in the past.
Well, staking as a service, has that feel of something that would fall under, maybe Reeves, and it's a note or something along those lines, and paying interest. And so that's a stickier wicket, for sure. I do think that, staking as far as supporting the network should absolutely stay out of any kind of securities conversation because that's what's the underpinnings of our whole ecosystem in some ways. So I think that's important. Look, I think we have to think long and hard about if we get one thing, do we have to give on something else?
Fair.
I just I don't know, as the laws and the case law is certainly written, what's the most persuasive way to say staking as a service does not fall into the securities realm. But I'm really open to seeing like really cogent arguments for staking as a service not being a security. At first glimpse, I think it kind of teeters a little bit into the security platform.
Yep.
So may I just
Go for it. Go for it.
Yeah.
So I think this, to your point, falls into a question of facts and circumstances. Like there's some that we can't get away from, right? We
Yeah.
do these tests for a reason. I do think though that to the extent that you are staking on behalf of another person, right? Staking as a service, but you're still able to trace, for example, the actual rewards that should come to that user, notwithstanding that it may have been aggregated at some point, right? And that maybe I think the more and more you can keep it, I mean, broad brushstrokes, but
Sure.
generally if you can keep it so that even though you're doing this service, it's still like if you put it in the cloud mining context,
Yes.
you're still paying your own electricity, you're still like getting your own reward, right? And while the service may take a slice,
Yep.
I would just say, like, on one hand, that's one possibility. On the other hand, there's obviously pooling in a completely different manner. And on another hand, there's, other kind of staking that isn't even covered by this statement, like liquid staking. But yeah.
Josh, David, thank you both so much. We've got a couple of questions. Josh, thank you for reminding me to look at the chat. I just want to jump real quickly to Eagle-Eyed Zach. Ron has been through a few rounds. Yes, for those of you who caught the Band-Aid, it feels like I've been through a few rounds in the years we've all been in crypto, but this reminds me that PSA, the sun is a deadly laser. Check with a dermatologist every once in a while, but everything's fine. So I'll just sit here like this. So
Ron, I didn't even notice.
Zach noticed, man, that eagle eyes. But all's fine, everyone.
I noticed, Ron. I just didn't know if you're having a bad shave day, so I didn't want to bring it up.
I haven't had a bad shave day like that since I was 14, David. So this is remember the sun's a deadly laser, kids. Be careful. I want to address the other question out there to LinkedIn user. I'm sorry we don't have your name. They said, David, hi, David. So this is directed to you. I've heard that in lieu of going public via SPAC or IPO, some PE investors are using crypto to shore up balance sheets of financially challenged public companies and then basically merging the strengthening company with one whose operations are strong. There's a lot here. Will we see more of this? David, it really alludes to something we started talking about a while back. And if you may remember our conversation about private markets, which as a piece of, as a percentage of public markets is smaller, but growing rapidly. We're looking at many billions of dollars. Have you seen this kind of engineering, David, in the private markets?
I mean, I haven't seen it personally. I've heard, people alluding to different strategies, but look, if there's a company that's original business model isn't successful, and they feel like if we pivot to something else, it'll make it more successful, people do that every day. It's just that this is the hot thing right now. And, it's like companies who rebrand themselves, and use the word AI in their ticker or not in their ticker, but in their...
Or ICT companies that become blockchain companies.
Just thinking of that. Long Island blockchain. Yeah.
So, I don't think this is unusual. It wouldn't surprise me if there's some engineering going on. And look, if you had a company that wasn't doing well, and it's a small company, and you felt like if this company owned some Bitcoin on its balance sheet and wanted to see it appreciate, and that would help the overall company's ability, I mean, it's a shrewd play. I mean, and somebody's going to have to evaluate that and decide, is that enough for that company to be successful and worth investing in? And maybe that does help the company get out of, a negative spiral, or maybe, it doesn't.
Josh, I know you've been holding on a question. Go ahead.
Oh, well, so before I ask you guys that question, can I just address one thing in this? Where it says, what sort of due diligence should investors undertake before buying or keeping stock of these companies? I think I would just, without going into the specifics of any particular company name, I think we've all heard of a company that had very great earnings, that were based on something crypto related where it hadn't been disclosed, or some regulators thought perhaps it hadn't been disclosed adequately how much the reliance had been on that and how volatile that could be. So I would just say if investors are looking into these companies that have changed their plays, to really understand the risks and how, yeah, that's basically, that's like, look beyond the financials, look into how the financials got shored up and what the underlying risks are. My question for you guys, and you guys could have called, like, it's possible you addressed this before I joined, but with this sort of online kerfluffle between Elon Musk and President Trump,
she went there, David.
well, in the past, 24 hours, I was looking at the price of Bitcoin, which is, I occasionally do, right? And it's not at its all-time high, right? But it's gone up from yesterday, notwithstanding this sort of public skirmish. So I'm just wondering what you guys think. I know when I joined, you guys had apparently just said risk on, but would love to know what you think, whether it matters at all, frankly.
I will start, David, and I'll share for the group. I am sick and tired of hearing about seeing on X and all these others, the bromance between the president and Elon Musk collapsing. And I think it really is indicative to me of something we talked about a bit earlier, David, that the crypto markets writ large, Bitcoin in particular, given its broad liquidity, is hyper reactive to macro news, but also hyper reactive to crappy X posts from Elon Musk and Truth Social posts from the president. Josh, David and I were talking about this before we went live. Bitcoin was approaching 100K in the midst of all of this, and held its own. Below 100K becomes a bit of a losing support, and then apparently there was a little bit of a reconciliation.
It's like 104 or something now.
Yeah, it's 104. It's just broke 105. To me, it reflects to me the volatility that's still out there. We should, as an asset class, we should not be reacting that way, without getting into the politics of it at all. David, tell me I'm wrong, but what did Elon post on X? Is this my second least favorite phrase after tariffs?
Look, it's complicated.
Heavy breath, heavy sigh.
It's complicated. As somebody who really appreciates candor and free speech, and look, sometimes people, sometimes you see things on X and other things where people are, stating their views in a way you would never see it in traditional media. Like, traditional media wouldn't have these kind of conversations. And look, some of these conversations may be less productive than others, but ultimately, we have forums now where people can express themselves freely and not be censored by, like, a newspaper journalist who's doing a story. And, I think we should be happy that we're in a place that we can have a free discourse about topics and it's accessible to everybody. Not every discourse is going to be one people are going to want to track, but the fact is that it's there. I think we can't underestimate how Twitter or X is crypto X. And the crypto industry is very, very involved in X and reads it every day a lot. So it could have like a little bit of a larger sway. But look, I think what happened to the markets yesterday. There was definitely like a negative view in the markets when this was going on. And, there was talking about one of the pieces of legislation and whether it's beneficial or not. So I don't think it's so far-fetched that, crypto is affected when the regular markets were affected.
Fair, David, and I don't disagree with you about, the public discourse. The sunshine on public discourse is a good thing. Maybe I'm too old-fashioned. I always expect a higher standard of conduct.
Look,
from some folks in the public sphere.
All I can say is this. I think in private, we have all been part of some of these type of conversations.
Oh, yes.
Okay. Whether
steak dinners come to mind.
Whether it's been in a locker room playing sports, whether it's been in a very animated conversation, like about a deal that people don't see eye to eye on.
Fair.
Or, in some of our meetings, like, it doesn't get acrimonious, but there definitely people have strong views on different parts of our ecosystem and what we should be doing, what we shouldn't. So I just think this is just sort of a carryover of that. And again, look, we're in a society where we have the ability to have these conversations and people can see them. And there's something to be said about that. And, that's where I land.
I'm with you. Josh?
I think that was very well put by both of you. Yeah, I mean, I was just reliving some of the conversations I've had like that.
I'm constantly trying very hard not to scroll through everything. It just is such a time suck and an emotional black hole. But David, Josh, good points. Go ahead, Josh.
I guess what I would just say is, people have different political views. So not getting political on this, but just, when you have people, you get the people that they are. You take the good with the bad. You take the innovation with the quirkiness or whatever it may be, right? I think if we're applauding some of the huge moves that the administration has made, that we might not have expected otherwise, then by the same token, we shouldn't, no pun intended, perhaps we shouldn't be surprised when people act like people.
Well put, Josh. Thank you. David, Josh, as we're running out time or almost at time. David, Josh, I wanted to ask one more question about the companies that are, holding crypto in capital stock. And we're seeing Bitcoin, certainly. We've seen now conversations about ETH, and I think a couple of companies now are going to be Solana treasury companies. David, will those have legs? And I guess the predictive question is, what's next? Will we see a Shiba Inu treasury company? I am not pitching Shiba for anyone out there who sends me that message after the broadcast. But is this a model across other crypto beyond BTC?
So I do think it's a model, but I also wonder out loud, like, when does it come from being a stock to being more like a fund? And that's sort of the thing that I always think about is when are these strategies more fund-like than stock-like? And so that, I think, is the question we need to ask. Because look, if there was a fund that was like long, I'm just going to pick Solana, that was long Solana, and you think Solana has really good opportunities, you would either buy Solana or you could buy the fund. And you could, have exposure to it that way. So I think that's the one thing that I think about out loud is, when is it really like a stock, and when does it become a fund? Because I think ultimately people are investing in these things because they want exposure to the different cryptos.
Yep.
And so these are different ways to get exposure. And I think sometimes it feels a little more fund-like to me than stocks. And I think if we all said, if there was a fund that was investing in the top 10, market-weighted cryptos, I don't think anybody would think twice about it.
Yeah,
it's just that it's in the stock wrapper that you sort of step back a little bit and think about it more.
Yep. David, Josh, go ahead.
Yeah, I mean, even more broadly, holding aside corporations holding this or something like that, even if we think back to like Libra, right, and the basket of currencies, right? As soon as you start aggregating, then you have the risk of a fund, or a fund-like vehicle.
Fund-like vehicle.
The question: are they securities? Important question, right?
That's beyond my purview. David, Josh, thank you both. Shout out to Trevor Talley. Thanks for joining. Always enjoys these conversations. Trevor, spread the word. I'll be back next week, hoping I don't look like I got slugged by either David or Josh. David, Josh, closing comments for the week. It's a little frightening.
I'm going to say, like, what a week. Buy in May and sell in May and go away is definitely not an issue this summer.
Yep.
Look, I think on the technical side, I'm really, really curious where we close for the week. Do we start seeing momentum and retest all-time highs? Do we see a sell-off and go below 100? I think it's really, this weekend and the next few days will be really telling in the markets. And I think on the legislative side, like, I'm certainly going to be, rereading the new version of the Genius Act some more. And I know we're all having a conversation about this afternoon, but like, can we get to the finish line? Like, what do we need to do to get to a final vote and to get this ratified and approved?
David, do you think, David, real quickly, and Josh, I'm sorry, do you think this stuff gets passed before the summer recess in Congress?
I mean, I truly hope so. I really think it's going to be an effort of the sponsors of the legislation. I think our friends who are lobbyists really doing what they do best to get consensus. And then I hope, people just realistically looking at what's left and just coming up with common sense decisions on those amendments if they're necessary or not, so that they either incorporate it or not and we move forward.
Well said, David. Ava, thanks so much for joining. Ava Costa, shout out. Thank you very much. Have a great weekend. Please join us next week. Josh, go ahead.
I would just say, big thanks, not just to those in industry or those in Congress, but honestly, their congressional offices.
Oh, yes.
And folks who are actually writing the legislation. I mean, the amount of work and effort, and even though from the outside it might look like, okay, well, are things moving forward? What's happening? It's like constant, like, what is that thing? Like ducks on the water, where underneath it's like pedaling.
Constant paddling, yeah. Josh, to that point, you and David and I and so many members of the WSBA, we've met with the staffers and staffers that think the SEC and the crypto task force. We cannot underestimate how hard those people work to get some of this stuff moving forward, which is not easy in the best of circumstances. Josh, what's your weekend going to be at Clayman Manor in the forests of New Jersey?
So aside from doing some work, my kids' last day of school was yesterday.
Oh, nice.
I may or may not have parent-teacher conferences this afternoon. But yeah, so they're done for the summer. So I think I will be occupied with them for part of the time. Not going anywhere too exciting this weekend, but it's a nice break after a lot of travel.
Indeed. Josh, David?
I have one more thing to add. I want to just give a shout out to my daughter, Sienna.
Congratulations, Sienna. Woo.
I am so proud of her. She is going to be going to the University of Miami in the fall, and I could not be prouder, and I just want to give her
congratulations, Sienna. David talks proudly about you all the time, and it's well warranted. David, Josh, we'll leave it there. I will leave with one slightly funny note. David, you started the conversation marking the 81st anniversary of D-Day, and again, fully agree. Thank you to everyone who sacrificed for that. I'm going to end on a completely not relevant note, but for all of our U.S. friends, today is National Donut Day. I'm going to go have a donut, Josh and David. Thank you, everyone. We will leave it there. Please spread the word. We will be back next week, Friday at 12 noon. Until then, everyone, have a great weekend. Take care.
Thank you.
Bye-bye.
Bye, everybody.